All right. Hello, everyone. Welcome to the third episode of the Lion's Share podcast with not only myself, Hamza Hamid. So, the market, especially the past few days, has been very, very turbulent. We've had ups, we've had downs. I'm sure many people have had ups and downs in their portfolios as well, which is why in today's episode, I want to primarily focus on quotes and motivation from the best traders in history. Okay, so we're just gonna go down the list. We're gonna talk about various different, very well-known, reputable traders, quotes from their books, and we're gonna go in a bit of a detail into those. And then hopefully, we're gonna end that off by talking about motivation, traders' mindset as a whole, and how to get through tough times and think about things in a more logical way, and not to really beat yourself down, especially when you're losing money. Because again, this is a completely new thing. We're in the first few generations in history where with a click of a button, you can either make a lot of money or you could lose a lot of money. So this is completely new. So you have to realize, hey guys, you have to remind yourself that, hey, yes, this is a completely new endeavor. This is not something that we have really a blueprint for. So the best that we can do is we could look back in the past few decades of what those people did, try to apply it into today's day and age. All right, so I hope that makes sense. Then we can end it off with some Q&A. Hello, Court. So yeah, guys, please feel free to drop any of your questions as well. We're going to take questions at the end of everything as well. Okay, so, all right, so the first quote that I want to go over is from The Intelligent Investor by Benjamin Graham. So he says, the stock market is a device for transferring money from the impatient to the patient. How true is that? You transfer money from the impatient to the patient. It's as if you're going long on a stock, and say, for example, you want to go long on a stock at $100, and you're very bullish on the stock. You think the stock is gonna rise. You think, you did all your due diligence. You did technical analysis on it. Everything looks good, but from 100, it drops down to 99, or it just did not jump in the same veracity or the same vigor that you wanted it to drop. So then, what did you end up doing? You end up selling it when that goes against your plan. The smart people end up either holding it or buying when you end up selling it. So this is not, you have to realize the mistakes that you make. And the market in general rewards those who can wait for the right opportunity and hold on to their investments through volatility, right? So this is a really, really important quote. The stock market is the device for transferring money from the impatient to the patient. Timeless. Very, very timeless. You could apply it to crypto. You could apply it to stocks, Forex. Amazing quote. And it just goes on to show further that if you're impatient and you trade based off of impulsive decisions of either fear or greed, having any sort of emotion when you're trading is negligent and very, very detrimental to your trading performance. You cannot do that. So it's very, very important to stick through it. Our ancestors, when they would set out to sail, they wouldn't turn back at the first instance of some sort of turbulence in the water, right? They stuck through it. So as long as you have your due diligence and your plan, remaining calm during extreme waves in the market is very, very important. And it could be the main difference between being a very profitable trader or losing money. Time and time again, how many times have we been in a trade where it doesn't go up in the exact moment that we want it to? We end up selling it and we see the market move up like right after we sell it. It's because they know how human emotion works, and they have things coded to manipulate human emotion to make us want to sell when certain things occur. So the way that we are trying to learn about how and why we act the way that they do, why we act the way that we do, these banks and hedge funds have algorithms built in to understand how retail traders think and how they respond. So it's very important to be more self-aware of why you're doing certain things. And it's just really important to have a longer term horizon, especially if you want to hold something for a bit of a longer term. You have to hold it through short-term volatility. You know, obviously in different circumstances, if you're day trading, it doesn't apply as much. But if you want to hold something for a couple months, a couple years out, regardless of what the market's doing, hold it. Don't get stressed out, right? So that was the quote from The Intelligent Investor. Quote number 2, Ray Dalio. Ray Dalio is he's one of my favorites. So Ray Dalio in the Principles, Life and Work. In Principles, Life and Work, he says, pain plus reflection equals progress. Pain plus reflection equals progress. Every single loss or failure is an opportunity to learn. You have to look at things in a different perspective. Just because you lost on a certain thing, or just because you failed on a certain thing, quote unquote failed, right? These are not things that you can just accept and just say, oh, wow, I'm a loser, I'm a failure. Imagine you were 30 failures away from success. How fast would you want to fail? How many failures would you just be begging to occur? This is the concept that many people don't really understand, especially with entrepreneurial endeavors as well. You have to fail so much that you have to learn what isn't working. Does that make sense? In the stock market, for example, there's so much that we don't even know exists. There are problems or there are things that cause movements in the market that we don't even know happens, why it happens. So we need to fail and we need to lose. We need to learn from those things very, very quickly. The faster we do that, the easier it'll be to quickly be making money and be a profitable trader. Does that make sense? After every single loss, you have to use that time, because losses are gems. You have to look at losses as gems. They do not occur very often when you become a better trader. Losses in the beginning are hidden gems. Change your perspective. They're not bad. Losses are very, very good. If you can identify why you made the losses and try to identify what you could do better, oh my God, that's the whole game in the beginning. If you're able to do that in the beginning, forget about it. You will end up being just a great trader eventually, that you're able to emotionlessly be able to look at what works and what doesn't work. So after every single day, take your proper journal out your trades. Try to be as detailed as possible of why you're taking certain trades. Why did I enter? Why did I exit? Why did I do what I'm doing? What does this mean? Why am I doing this? If you can detail why you're doing certain things, it makes things so much easier. You have to make after action reports on your trading, especially in the beginning as well, because you're going to lose. The whole concept is you want to lose, right? So you want to lose. Not, obviously you don't want to lose all your money, but you want to know what isn't working. If, for example, you made money on a trade where you shouldn't have made money, that's very, very detrimental, because then you'll have like a false sense of, oh, wow, this works. The next time this occurs, I could just double down and I'll make very, very bad. So you only want to make money on trades that are reasonable to make money on. You don't want to get lucky. You never want to get lucky in this market, because you'll delude yourself into thinking that it's normal. It's not normal. Those are anomalies. So that's another thing. So definitely after every single day, monitor your trades, figure out why you're taking them, why you're exiting, everything, okay? And that really also helps you eliminate emotions from trading as well. If you're able to see everything written out in your decision-making process, it'll really, really help you detach your emotions from trading. And that's very, very important also. So definitely make sure you guys do that as well. Hit the like the stream as well, guys, if you guys are enjoying. So yeah, pain plus reflection equals progress, which is why you really, really need to regularly review what you're doing right, what you're doing wrong. Just review what you're doing in general, because it really, really goes a long way. Quote number 3, Tony Robbins, Money Master the Game. He says, the path to wealth is simple. Spend less than you earn, invest the difference, and avoid debt. So avoiding debt isn't necessarily the best. There's, a difference of opinion. If you could use debt properly, it's great. But just in general, this is a pretty general quote. So once again, he said, the path to wealth is simple. Spend less than you earn, invest the difference, and avoid debt. So what you could do with this is, of course, when you're first really trying to make money, right? You want to live frugally. To get from $5,000 to $10,000 a month, right? To get to the next level, you need to frugally and stop spending so much, save, and reinvest what you have so that you can get to the next level. Because the whole point, especially at first, is to increase your income. If you've already tapped your income in terms of your 9-to-5 job, everything else afterward is you want to add to your income. You're not going to be able to do that if you spend money every day on, if you're spending, $20 a day on food and drinks, $30 a day on lunches, everything. You're not going to be able to have, an extra $500 or $1,000 a month goes a very, very long way in terms of trying to multiply your income. And you need that extra income so that you can, take risks and you could learn from what works, what doesn't work. And that's why, just without even thinking, you need to just allocate a certain portion of your income into a trading account. Of course, I'm not your financial advisor. This isn't financial advice, but automatically, just without even thinking, just allocate a certain percentage of your income to these endeavors that will increase your income and increase your trading portfolios, your investments, something. You should just think about, you shouldn't even think that you have it, right? You should just allocate that automatically almost. You could just create some sort of an automatic payment system with, Coinbase. You could just automatically buy Bitcoin or buy some sort of crypto or dollar cost average automatically every single week or every single month. You could do that as well. So, and that's the thing with especially trading, right? If you want to learn how to trade, you need money to trade. You need income to trade so that you're able to trade without having any emotions. If you're able to trade without having any emotions, it allows you to take more logical and better decisions. We want to take the emotions out of it as much as possible. Does that make sense? We want to take as much of the emotions out of trading as possible. So what do I say? Risk management, protecting your capital, not allocating too much into a certain position. But also the other aspect is making sure that you have an income. If you're able to have an income, you can comfortably just sit back and say, okay, this trade is not life and death for me. I am not completely dependent on this trade to pay for my bills. That gives you you could sigh. It gives you a sigh of relief where you can understand, okay, I'll be able to learn from this if it goes wrong. But if for example, if you don't have an income and you're in a really, really good trade, if this is your last money, if that trading income is your last money, if that trading portfolio is the last money that you have, you don't have a job, and you have like a 5K account, you're like, okay, I need to make this work. You could be in a perfect trade, but because it goes down just a little bit in the opposite direction, you start getting dizzy, anxious. Oh my God, it's not going to work. And then you end up selling out. And right after you end up selling out, the market rips to the upside. What do? You want to chase the rip to the upside? What ends up happening? The rip to the upside falls down and you end up losing money on a trade where you should have made money. That's what ends up happening with this market time and time and time again. I'm sure this happened to so many of us. It is what it is. It's because we are either fearful or we're greedy. So you have to realize that stuff, guys. You have to be self-aware of these certain things, man. So I hope that makes sense. Like this sort of stuff is very, very important to monitor day in and day out. Every single day you have to realize, okay, what kind of mindset am I in right now? How do I feel as a human being? How are my emotions right now? Did I get proper sleep? Am I stressed out from work or my family? Is my wife stressing me out? Is something going on at work? What's going on? Am I able to make proper, rational, emotional decisions right now with trading? Logical decisions. If not, then it's either a better idea not to trade at all, or it's a better idea to take a much smaller position size or to paper trade. Does that make sense? So you need to monitor your emotions, regulate how you feel, and just try to understand how you're feeling so that you don't make these just dumb trading decisions. Because oftentimes we do have very self-deprecating behavior. Very, very self-deprecating behavior. But if you don't fix these behavioral or emotional issues at first, it's going to be almost impossible to increase your income. The people that make a lot of money tend to have somewhat of a decent control over their impulses. And as we know, impulse control is very, very important with trading. If you're able to control your impulses, not just with trading, if you're able to control your impulses with women, with drugs, alcohol, food, sleep, exercise, it's a whole package. If you can constantly control your impulses in multiple different avenues and you get these small wins, you get these base hits in multiple different avenues of life, when it comes to trading, you're going to be like, okay, I mean, I already have an entire repertoire of things that I'm very disciplined and I have a lot of impulse control in. Trading, I'm up on a position, no problem. I'm not going to be greedy. I'm not going to chase it. I'm not going to chase this woman that I shouldn't be chasing, right? I'm not going to be doing this drug or drinking this much or something like that, right? So it's all a culmination of things. You need to realize, like, trading is not, it's not just trading. Trading or any sort of business or any sort of entrepreneurial endeavor, you need to also level up as a person. It's not as easy as just, okay, I know technical analysis now. Now I'll be able to be a good trader. Not at all. You need to become the person and develop into the person that can make a crap ton of money in an instant without getting crazy, without throwing it all away. If you're not able to do that, you'll never be able to keep that money. You'll always end up losing it. Making money in the stock market is the easiest thing. It's so easy. You can just click a button. You have a 50-50 chance of it working in your favor. Keeping the money is the hard part. So if you can master that, mastering your impulse control, forget about it. That's the game. I hope that makes sense. Why I do what I'm doing. That's me. All right. So Jesse Livermore, he says in Reminiscence of a Stock Operator. Reminiscence of a Stock Operator is probably one of my favorite books. He says the market is never wrong. Opinions are. So regardless, the market is going to do whatever the market does. The market could go up. The market could go down. There's another quote. The market can remain irrational longer than we can remain solvent. Meaning the market can just do a bunch of stupid stuff. It could go up and down. It doesn't need to have a proper logical direction. So the market could just keep tumbling like we see in the past few days. The market can just continue tumbling. But if your opinion is, oh, the market shouldn't be tumbling like this. I don't think the market should be tumbling like this. It should be rising. I don't know. If you go into the market with an opinion and you think that your opinion is what should be moving the market, you're always wrong, because the market is never wrong. Opinions are. So you can never have an opinion when you are trading. Does that make sense? You always need to make sure that you keep emotions and you keep your opinions out of this. It has a lot to do with ego. Who are you? Who do we think we are that we think that we know what the market should be doing? We don't. You need to put your ego to the side. You need to stay humble. You need to accept what the market is giving you and trade it. You cannot just automatically think, oh, okay, I'm right. I know this is going to end up happening. I'm going to throw my whole portfolio into this position. How does that work? How does that work when you put your whole portfolio into a trade? It doesn't. You end up losing a lot of your money. So you need to realize this is not how you trade. If you're in a trade with a nice, decent position size and it starts going the opposite direction and you're like, you know what? Oh, the market should be bouncing here. It should be bouncing. Let me triple down. Let me quadruple my position size. Your opinion, our opinions, guys, is what's causing us to lose money. We cannot do that. Does that make sense? We cannot overly extend ourselves based off of just opinions. The market is always right. The market is going to do what it does. You cannot just impose your will on the market. Okay. Like, you cannot blame the market for what's going on. You always have to take responsibility for yourself, and you always have to blame yourself. No matter how experienced you are, the market can humble you. And, for example, like even after like years and years of trading, I still lose. There's still losses that occur. But regardless, you need to remain humble. Because if I've been trading for years. I've made this much money. I'm a profitable trader. You're still going to lose. Just because you're a profitable trader doesn't mean, for example, I'm speaking to myself. Just because you're a profitable trader doesn't mean that the next trade that you take is going to be a winner. You need to still have the same discipline, have the same risk management, have proper risk management to make sure that you continue making money. But, that's impulse control is very, very important. And that's a big thing that many people have a lot of issues with. So, you have to cut losses. You can't hold on to trades hoping that they'll turn around, and you can't just be married to a direction. You cannot marry a position size, or you can't marry a position and think, okay, no, this is going to work out. Oh, it'll work out. Let me just hold it. Oh, the market shouldn't be falling. It'll bounce. Oh, market's, the SPY's at 595. Say, for example, you went long at 610. Say you went long on the SPY at 610. The market's at 595 right now. Oh, no, it'll bounce. What kind of trader are you? What kind of risk management do you have? This is why, you need to realize you're not going to be correct about everything. It's okay to take losses. It's okay to take losses. Many people have a big issue with trying to take losses, and that's just it's not healthy. It's really, really not healthy. So Peter Lynch. So this is quote number 5. So quote number 5, Peter Lynch says, in One Up on Wall Street, he says, know what you own and know why you own it. So if you want to enter into a long-term position, if you want to invest in a company, if you want to invest in some sort of ETF or basket or some sort of company, crypto, something, you need to take a lot of time to research what's going on. You need to take a lot of time to research what's going on. This, obviously, what I'm saying sounds very, very basic, right? But you would be very, very surprised in how many people just hold on to something long term because it's trendy. They don't even research it. They're just like, oh, this person said this is a really good hold. Let me hold it. Oh, wow. Oh, he said it's a really good long-term investment. Let me do that. It's your money at the end of the day, right? So it's like you want to make sure that you're putting your money into something that you've at least done some work into making sure that it's okay. If not, then it's like, what are you really doing? What's the point of investing into something? Just you need to have more pride in what you make your decisions based on, right? You want to be able to take high quality, long-term decisions in things that you've done your proper due diligence and research on. And you need to do proper research. You can't be investing in things that you don't understand. In the cryptocurrency market, for example, blockchain technology, you should not be invested in crypto or blockchain unless you properly understand what that technology is. You need to understand what blockchain technology is if you want to invest in crypto long term, so that you'll really understand, okay, these are the use cases. Instead of investing in Bitcoin, maybe there's a better investment in something else. If you work in supply chain, or if you work in any sort of particular industry, if you have expertise in it, when you do research on crypto, or if you do research on a stock, your extra knowledge will help you make a better decision. You're like, okay, instead of, I'm really good at this one subject, instead of investing my money in this that is decent, I could probably find a better company that I understand the technology of that company will do much better. So think about it like that. Don't just take things in a more passive, lazier way. Do your research, really, really look at things long term, understand the company, understand the dynamics of the company, the money, where the money is going. Try to do as much research as possible. Even like keeping up with the news, earnings reports. Try to be as understanding and detailed as possible in all these different aspects. Okay, so this is more of a quote from Michael Jordan. So I want to go over a quote from Michael Jordan because right now, of course, the market is very, very the market is bouncing around like crazy. I'm sure many people lost money recently on the drop down lower. They might have gotten, people might have gotten chopped out. It's important to understand not just things from a trader's perspective, but also from a more competitive or a mindset perspective as well, because it's very important to have a strong mindset when you are trading or when you're doing any sort of entrepreneurial endeavor, right? So we're going to go over a quote from Michael Jordan. So Michael Jordan, he says, "I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. You need to embrace failure. The best athletes, the best in the world, embrace failure. You cannot look at failure as, oh my God, I just failed. You cannot look at it like that. You have to embrace failure. You have to accept it, and you have to learn from it. You have to change your perspective on what failure is. Failure is a way for you to become better. Like I was saying before, imagine you were only 20 failures away from hitting it big. 20, say you're a salesman. You're 100 sales calls away from landing a really big client. You would pick up the phone. You would make 100 calls that same hour. You would try to churn out as many calls as possible. You would want to fail as quick as possible. But instead, what we do is, okay, I'm taking a call. I don't want to fail in this call. Oh, I'm taking a trade. I don't want to fail in this trade. Oh, this is so important. Oh, I can't fail. And then if the trade doesn't work out, I'm done. I don't want to trade anymore. Oh, I can't make these calls anymore. Oh, I don't want to do this anymore. For what? Because your perspective on what's going on is wrong. You need to have an ironclad, stronger mindset in terms of what is failure, what works and what doesn't work. Regardless, if something doesn't work, that's great. I love it. That's awesome. Learn why it's not working. Learn from your mistakes. Try to figure out why these things are not working so that you can learn from them and then succeed. Does that make sense? Like, you're losing trades at first. Once again, you're losing trades at first is what's going to define whether or not how fast you're going to start making money. The faster you can lose and the faster you can learn from your mistakes, the faster you'll end up making more money. like just in general, right? Like success as a concept comes from pushing forward. It comes from endurance. Success comes from perseverance. It does not come from wins. It comes from pushing through losses. That's the thing that you have to realize. That's the thing we have to realize. Success does not come from just winning. It comes from pushing through all of the losses, getting up after every failure, brushing yourself off when you've fallen in the mud, when you've fallen into the dirt. If you can't do that, if you think that the road to success is just going to be sunshine and rainbows, you think it's just going to be constant win, 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 you are deluded. You need to realize losses are a part of the game. Success is, if you fall 10 times, you have to get up 11 times. If you fall 100 times, you have to get up 101 times. It sucks falling, but that's a part of the process. You need to love it. You need to just embrace it and just understand, thank God I'm put in this position where I'm making these losses. Thank God that I am in a position where I can fail and where I have the mental clarity to understand that these losses are a part of the journey. You need to change your perspective. A lot of this is just perspective. We've grown up in school. We've been taught from a young age that if you're wrong in school, if you fail a test, you're an idiot. That's not how it works in the entrepreneurial or trading space. You need to realize that just because you took a loss or just because you are not, doing that well, as long as you're persevering and pushing forward, that's all that matters, man. Because as you continue pushing forward, that's when the magic happens. Have you guys ever seen that image where it's like a miner and he's digging through a mine, right? It shows two people. One person on top, and they're both digging. The guy on the bottom, he stops digging right as there's gems. Right as there's gems, he stops digging. He walks backwards. He's like, oh, I shouldn't be doing this anymore. Oh, I don't want to do this anymore. The guy on top, he kept pushing forward and he found the gems. You have to realize you are going to be digging into dirt with no success at all sometimes. You might not have any success for a very, very long time. But who you become as a person while you're pushing forward into the dirt is the most important aspect of this journey. That's so important for people to understand. Who you become as a person through the journey of all the dirt, all of the failures, all of the trauma, the sadness, the depression, all of that, the person that you become through that, the disciplined behavioral aspects that you learn innately as a person is what can cause you to become very, very successful. But you have to push forward. It takes endurance. It takes stamina. It takes perseverance. It takes patience. That's the best part about it. Not everyone is willing to go through that. Not everyone is willing to go through all of that hassle. It's a hassle at the end of the day. It's very, very, it's annoying. It's stressful. Why would you want to do that? Why would you want to do that? It doesn't make sense. Why would you knowingly put yourself through so much stress? I have a nice, comfortable job. I'm comfortable. I'm coming home. I have a family, kids. Everything's good, right? Why would you put yourself through that extra stress? Your wife doesn't want you to go through that extra stress. I'm sure, right? I'm not married. I don't have kids. But your wife doesn't want you to go through that extra stress. People around you, I'm sure many people around us in general are not going through this stuff. They're not even bothering taking the steps, right? So it's like you're alone basically on this journey. You might have a supportive wife, which is great. But do you really want to go through all this extra turmoil and emotional stress? No, most people don't. Which is why it's very, very rare that people make it big. It's because it takes a lot out of you. It takes everything, So, resilience is just so important in this game. You need to be very, very resilient. You need to look at things in a very, very, aggressive manner, and you cannot accept failure as a point where you stop. You have to look at failure as a point where you continue trying to learn why you're failing. You can't take losses as a, okay, I'm done now. You can't do that. You have to look at losses as a learning lesson. That's why resilience is so key in every single hero's journey, in every single superhero's journey, in every single successful athlete or any sort of business anything like that. Resilience, being able to persevere, is the common denominator among almost everyone. You need to be consistent and you need to persevere through losses. Life is not just going to be just to climb up. It's not going to work like that. You need to continue pushing and pushing and pushing, no matter what. No matter what, you have to continue pushing forward. That's the best part about it. It's very tough, but that's where the beauty is. That's where the beauty in all of this is, guys. I hope that makes sense. Like the ability to be able to, like, just the ability to bounce back is so important. You have to roll with the punches. If you get punched in the face, you have to do a 360 and just continue moving forward. So you get punched in the face really hard. Get punched. It made you turn all the way around. And then you just continue turning around and just keep pushing forward. Even if, no matter how many times you get punched, you have to just keep moving forward. And that's really what it is. That's really, really what it is. So in the process, you know, you want to make sure that your face and everything, your health is still in order, right? But, you know, it's just really a part of the process. You have to realize that failure, losses comes with it. So if you can persevere through all of that, then, you know, that's where the beauty is. Let me know. Just drop a comment below if you guys like me talking about this stuff, if you guys enjoy me talking about this stuff more. But yeah, if you guys have any questions, feel free to drop them. Please let me know how I can help. If you have any questions, trading related, anything like that, please let me know. I'd love to help. We could keep questions going for a bit. And in the future, if you're watching this later, drop a question in the comments and I will answer them in the next episode. Um, Vlad, thank you for the advice, Hamid. Question: how long did it take for you to see success, and what habits were a catalyst for it? Going for 3 years now, and 18 years old currently. Nothing yet, but hopeful. Okay, so essentially, I started trading when I was 16. So this was back when you needed to pay a lot of money per transaction on E-Trade and Scottrade and different brokerages. This was before Robinhood. So I started learning how to trade at 16, essentially at the same time when you did, and in high school. So what I really did at first was I paper traded, and I became really good at swing trading. So I really tried to focus on swing trading and paper trading, the regular stock market. But what I also got very lucky with is I got very lucky with crypto early on. So I was able to have like a big cushion where I made money on crypto, and I was able to allocate a lot more time to learning how to trade more because I just got really lucky, thankfully, in the early days with crypto. And but really genuinely, what it took about 4 years to become consistently good at day trading and swing trading. So yeah, I made some long-term investments. Congratulations, but you can't make a living off of that, right? So it took a very long time to become consistently profitable in day trading. So a lot of people had a lot of bad courses and they just weren't good, right? So one of the things that ended up happening with me was I studied up on every technical indicator, all of the charting patterns. I learned everything about accounting, how to read the books, balance sheet, cash flow, everything. I learned all of that stuff. So that is a really good foundation, especially when you're young. Do not just only focus on technical analysis. It's very important for you to understand why big money enters certain things as well. So, don't just try to chase, oh, if I learn this scalping technique, I'll be able to make money. Yeah, you will. You definitely will be able to make money in the short term. But you'll still be like, you're basically just blind to 50% of why big money actually goes into certain companies, right? So that's very important. Obviously, you don't need to allocate that much time to it, Vlad, right? Depending on like what you want to do in the short term. If you just want to make money, technical analysis is really all you need, right? But the other main thing is you're 18, right? So you need to realize like you're 18, you're probably like, I don't want to get too vulgar with what I'm saying, right? But the bad habits that you have permeate into your trading. Does that make sense? So if you have bad habits in your personal life, if you're not disciplined, or if you don't have proper risk management in your life, right? You're not going to have proper risk management in your trading. If you don't have impulse control in your life, you're not going to have impulse control in your trading. And when you're 18, it's, like most of us don't. So it's one thing that I would definitely tell you to do is just open up a Google sheet and write out in detail why you entered every single trade, why you exited every single trade, the time you entered, the time you exited. Be as detailed as possible. And doing that will also really help you focus on why certain things are working and why certain things aren't working. Question: how do I accept that I'm wrong about a trade without feeling defeated? You have to remember that even the best traders have losing trades, and you need to focus on the process, not the outcome. So if you follow your strategy, if you manage your risk properly, you did your job. Not every trade is going to work. So you need to just accept the fact that, some trades just don't work out. But as long as you stick to your principles and your rules, that's really all that matters. What are some signs that a trade isn't working and I should exit? If the price hits your stop loss, or if the fundamentals of the stock or the company isn't aligned with why you originally entered, then it's probably time to exit. And you should not allow greed to dictate your decisions. You should not allow greed or fear to dictate your decisions. Celebrate the fact that you're taking proper risk management. Celebrate the fact that you are, allocating a proper amount of your portfolio, that you stuck to your stop loss, things like that. Celebrate those things. Also you could surround yourself with a good community. For example, like my Discord server, you could share experiences with other people that are also on the same journey. And it's very important to be around people that are also very supportive and also on the same journey as you, because trading or any sort of endeavor like this is very, very lonely. So you want to be around people that are also on the same journey as you. So, what are some techniques for staying disciplined? How do I avoid over trading? So basically, I think the main thing would just be set a daily trading limit. Set a daily limit of okay, if I lose this much money, I'm going to stop. Or if I make this much money, I'm going to stop. It's important to have these things set in place, set in stone, no matter what, no matter how you feel, regardless. You need to have rules. For example, okay, I'm not going to trade if I didn't sleep the night before. Or I'm not going to trade if I did this, or if I feel like this. I'm going to stop trading if I lose this much money. Or I'm going to stop trading if I make this much money, right? I'm not going to trade for the rest of the week if I make this much money. So you need to have these rules set in place. That'll help you stay disciplined. That'll help you avoid over trading as well. What are some ways to build discipline or resilience? What are some ways to build resilience as a trader? One of the most important things is you would need to have a daily routine or a physical routine where you are pushing yourself with exercise, or you would need to not only exercise, you would also need to I really forgot the word. That's crazy. Meditate. Focus on your breathing, sitting down and just quieting things around you, just trying to be present in the moment. Mindfulness practices. So not only would you want to focus on your physical health, you would want to focus on your spiritual health, you would want to focus on your mental health, and you would want to develop good habits in those realms. If you're able to develop good habits in all of those different realms, then you'll be able to have more confidence in yourself. And in turn, you'll be more resilient as a trader. Because if you already know, okay, I go to the gym all the time. I'm working out all the time. I eat healthy. I don't do things that are detrimental to myself or my future. Then trading just becomes much easier because you've already added to the repertoire of all of these good habits that eventually then being successful with trading just becomes an inevitability. Because if you're already disciplined in all these other avenues of your life, if your physical health is on point, your mental health is on point, your spiritual health is on point, whatever that may look like for you, then God and everything's just going to make it easy for you. So if you're doing all of the work that you possibly can with this in every aspect of your life, if you're good to people around you, if making more money makes you a better person, then you want to make it, you essentially want to make it so that God wants you to have more money. You want to make it so that God will give you more money because he sees that, okay, this guy is not a piece of crap when I'm giving him more money. Or, okay, he's becoming more successful. He is not becoming more of a piece of crap. So you want to have God on your side. Does that make sense? So how do you do that? You need to put in a lot of work and effort on yourself. So that's another thing that just builds resilience. Yeah, guys, please let me know if you guys have any other questions, anything else that I could help with, anything that I could help answer. What are the SPY levels? 593 support. 597 resistance currently. Joe, how do I get out of a tilt? I get drawn in and can't stop. So what I would definitely say is you should how do I get out of a tilt? I get drawn in and can't stop. So there's a few things that you could do. So number one, you would need to go back and try to assess what you're doing wrong. Okay? So that's why having a trading journal is very, very important. You need to be able to monitor and write out in detail why you're making all of your decisions. Not only just your trading decisions, you also need to monitor, like, okay, like, this is how I felt while I was going into this trade. I only took this trade because I was feeling like a psychopath and I was just tilted and I want to just take this trade. I'm saying this with respect, right? But, you know, we sometimes get into that mode where it's like, oh, it's going to work. Oh, I'm going to go long. I'm going to take this short. No. So you need to realize, okay, I was taking these trades because I was not thinking properly. So it's important to detach yourself from that circumstance because that is not you normally, right? So it's important to look at that as a separate thing, and that's why it's important to have a trading journal. So if you can, review your risk management, understand that this is not good trading behavior, then you're able to learn from why you were making those decisions. And it also boils down to having like extra discipline as well. It's a whole package. You need to have discipline. You need to just be able to manage your stress. You need to be able to manage your greed. You're not going to make up all of your losses in one shot, right? So it's like if you're tilted and you just overtrade, at some point you need to have a stop. You need to have a daily limit in place as well. So you need to stop trading at one point. Or if you took too many trades for the day, you need to stop trading for the day, right? If you lost too much money for the day, stop trading for the day. Don't try to make it up. So there's many different things that you could do to get yourself out of a tilt, just programmatically, right? Regardless of if you're feeling tilted, you're going to stop because you have these rules set in place. Hope that makes sense. Like you have to be able to control what you can control, right? You're not always going to be able to control your emotions, but you want to be able to control your decision making. So regardless of how you're feeling, you need to have things in place to make sure that those, bad trading decisions don't occur. So I hope that makes sense. Yeah, this makes sense. Guess my problem is when I lose and regain the losses, I keep going instead of stopping. Then I lose it all. Yeah, that's the fun part. That's the greed. That's the greed in you, brother. Like that's the greed in all of us. So it's like, how many times do we want to go through the same thing? That's the question. How many times do we want to go through the same bullcrap? It's like, this is not the first time this has happened to you, I'm sure. It's not the first time this has happened to any of us. But at some point, you just have to just stop and just realize, like, okay, this is it. Like, I'm not going to continue doing this bullcrap anymore. I am going to be okay with taking a loss. I'm going to be okay with taking a small win or a small loss. Not every day is going to be a huge win. As soon as you start realizing that, that's when you can start really, really ramping up your trading. But that's just a part of the game, brother. Um, I can tell how to trade, but I can't tell myself. That's the biggest problem many people have, is we need to be able to control how we trade. Like, we need to be able to control ourselves. That's, you know, that's a big thing. That's why it's very, very important to have these different things in place on the outside, have like the models in place, to have, like, the system in place to make sure that regardless of when you're doing something incorrect, you have something in place to make sure that you don't continue making those same mistakes. But yeah, man. But yeah, if you guys have any other questions, feel free to drop them in the comments, send me a DM. I will definitely go over them in the next episode. But for now, I think this was pretty good. I like going over this format where we're not only just talking about, trading strategies, but we're also going over the mental aspect of trading as well. And that's very, very important. So I hope you guys enjoyed today's episode of the Lions Share podcast. I will see you guys in the next episode. Love you guys. Have a good one. Take care.